Hey Brendan, welcome to Startup Project. Thanks for coming on the show.
Thank you so much for having me. Really looking forward to being on the show. Thank you.
Yeah, so just for the audience, to give a little bit of background, how we got connected. We got connected because of our mutual connection, Martin, with whom I work on a daily basis for his fund Insights VC. And I think he's an LP in one of your funds, which invests in India. And he's also an investor in, I think, five more funds in India, I think. I forgot. But it's great to finally have you. We've been scheduling this for a while. And I think with all the time zones and you traveling to India quite often, we were able to finally do this. So glad to have you on.
Yeah, thank you so much. Really looking forward to getting into it. It's been a while in the making, so excited for it.
So before we get started, like, can you talk a little bit about your background and sort of your earlier career?
Yeah, for sure. So first was a founder for 11 years. But before that, I was like, I usually start by saying that I was like an athlete. So I loved being on teams. I loved the camaraderie, the ups and downs. So was a soccer player growing up and in college. And then I got the startup bug and started my first business in 2011. And it was in the online dating space. Um, and just really loved being on a team again, going through the ups and downs, raising capital, etc. That business we scaled that business from 2011 to 2013, and then was acquired by IAC, and then in 2014 moved down to Los Angeles and started a company called WAG, which was the Uber of dog walking. And now you can say it's the button on your phone for your paw. So really owning the full stack of your pet. That business went public last year, and I started my India journey in late 2019. I met a gentleman by the name of Herschel Mehta in 2019 by a mutual founder, and he was investing through his family office in Indian and U.S. companies. And he was telling me about his family success in India, specifically his cousin, which was a exited founder and really one of the first super angels in India. I like to call him like the Ron Conway of India. And in 2019, he started the largest pre-seed accelerator called 100x.vc. So I was randomly asked to go to the demo day by Herschel. And I felt really special because I thought it was my only invite, but apparently he invited about 50 people, but I was the only guy that showed up. So that was kind of the start to the India journey, and that's the background of how I got into startups.
Before getting into the India journey, can you talk a little bit about how WAG started and are you still working with WAG? Or what's your relationship with WAG right now?
Yeah, so first off, WAG was started because there's a massive pain point within pet parents on getting their dog walked, specifically in large tier one US cities. So obviously in LA, a lot of dogs are inside. It's hot. There's a lot of traffic. And when a lot of people wanted to stay out later with their friends or whatnot, or be able to travel, and sometimes their pet, it was difficult to get somebody to watch their pet. So saw this massive opportunity around, at least from the beginning, from the supply side. So everybody in LA has side hustles. It seems like everybody wants to be famous still in LA, but they're also very receptive of having these side jobs. So it was a perfect kind of launch market from a supply perspective. And then a lot of people in Los Angeles also kind of prolong marriage and children. So a lot they have pets. So it was like a really awesome place to launch. And really the idea was to provide a frictionless experience for pet parents to have their pet walked on a daily basis and have full transparency around the walk, etc. And now that business, does many different services from sitting and boarding to veterinarian help, etc. I'm not with the company. I left in 2019. I call myself one of their biggest cheerleaders. I am a shareholder, a huge supporter of the business. So it was an absolute phenomenal journey, and the team now in place at WAG is is doing a phenomenal job, and I could not be more excited and support them from the sidelines.
So when did you decide to leave? So when you decided to leave WAG, was the India opportunity the main reason, or was it?
So it's interesting. I went to India. I went to India before um I left WAG, but the India opportunity really came about when I mean, I was at like a really big crossroads in my life. I was on my 10th or 11th year in the whole startup ecosystem, and was ready for like, a new challenge. And WAG, got to a point with a lot of employees, and it was a big business. I really loved the earliest stages, specifically pre-seed seed. So went to India was like, an opportunity to explore and be curious. And I've always was like very fascinated around emerging markets, specifically India, because, I look up to like people like Lee Fixel, early investor in Flipkart when he was at Tiger, and people like that really like investing into India that were not from India, and saw the growth and stuff like that. So I was always curious. So, but when I came back from India, I knew that I had to be a part of the ecosystem in some capacity.
And you, so how did the India journey start? And you mentioned Harsha invited you to the demo day of his brother's incubator, which is Sanjay Mehta, right? And he's, I think, pretty popular in India right now with 100x VC. So how did, at what point did you decide to start a fund and sort of go all in India, on India?
Yeah, great question. So yeah, so when my first trip was to the 100x demo day in 2019, um, I when I went to India for the first time, like just going to Mumbai was electric. Mumbai to me, the hustle, the organized chaos, the people, it just like it like lighted something inside of me to give me so much energy. And I thought it was like I was truly on a journey there. And when I met these founders, I felt like I was in Palo Alto again, just like with their technical expertise, their passion. And I've worked with lots of Indian engineers and product managers, et cetera. I just really felt like I could feel the growth. I could feel the just the energy inside of me. And when I got back home to the States, I started like doing macro diligence, just like on the market, and started like just writing like a couple posts here and there around my India journey. And that's when started connecting with Indian founders. And I remember, I don't think I've said this publicly online, but the very, 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 very first deal that I like diligenced and like spoke with the founder was a company called Ultrahuman, which at that point it was like a meditation app, but now it's like a wearables company and stuff like that. And it's a pretty successful business, but the founder, I believe his name's Mohit Kumar, reached out, and like that was like super interesting to me. And I think Nexus was leading the round, and I sent it to Herschel and a few other people, and they were like, "Wow, how are you getting access to these deals?" And I started like connecting with like really, aspiring founders and successful founders, and that really like, and with macro diligence that I was doing and understanding like the Gen Z population and the sheer size of the Gen Z population, and India's digital stack, and kind of Indians consuming more in tier one, and even now in Bharat, like exponential consumption's happening, and it all led to like just overall excitement. But also I had access to like deal flow. And at that point, I was just sending deals to relevant people in my network, like VCs, angels, family offices. Like I was just giving, 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 um, and not expecting anything in the return. I just wanted to build my name and my brand because I knew that sourcing at the early stages is everything. If you have proprietary access to sourcing, you're gonna win. Um, so that Ultra Human deal really kind of unlocked some really interesting conversations. And then I started reaching out to like founders that had crazy successful businesses. And, For an example, like Kunal Ball, used to work at Microsoft. His story is he's like one of my mentors. Like I think that guy is absolutely amazing and has done a phenomenal job. And I reached out to him and he got on the phone with me and we had an amazing, conversation. And then the next person was a guy named Sahil Bruna, founder of Delivery. Just today, I think he announced he's profitable, went public last year. Like I started getting access to these individuals where I was learning and I was just curious and whatnot. So that's kind of how it all started. And with Herschel, I knew that Herschel has the analytical investing track record and background because he was like 40 companies in. I didn't have that track record. Um, and I knew that if I partnered with someone like Herschel, I could start the race at like mile 5 instead of like mile 1 because of his cousin's proprietary access, the accelerator, the relationships he started and whatnot. So that's kind of how it all began.
Um, so then, what is sort of like the operation of the fund? I guess you both collaborated to start with AMVC. So what is the fund size like? Um, where were you investing? Were you investing primarily in pre-seed, seed? Talk a little bit about like the fund dynamic.
Yeah, so Fund 1 was 10 million. And we've deployed about 70% of it so far. Um, We're sector agnostic, pre-seed, seed. We lead most of our deals. We source probably 99% of our investments. Um, we average check size. So we're in about 45 companies. Early on, we wrote, small checks, like 25K checks, whatever it is. But a lot of like we did a couple checks like that, but that was really around like getting into PR, getting access, and just starting getting like putting like our numbers on the board. But then we soon comfortably, uh, on average, started writing around like 250K checks, and now it's like around that 300K mark. We were targeting like 1 to 5% ownership. Quickly realized that ownership obviously matters, and hence our second fund will be a $25 million fund, same strategy, but just coming to the table with a larger check to get more ownership. So those are like the fund kind of like dynamics, and then also like our LP base are a lot of NRIs actually in Silicon Valley and in Seattle, etc. Um, Obviously, these individuals took massive risk coming to the US, did phenomenally well. They want to be a part of the India journey now. Family offices. We have GPs of other Silicon Valley funds, founders, board members of top tech companies, stuff like that.
So talk a little bit about the fund one companies. Like, were there any breakout companies? I know it's sector agnostic, but you sort of lean into some sectors as you explore the market, right? Like what what did you discover in terms of like which sectors are thriving or which ideas were thriving?
Yeah, so it's funny. So first deal was Ultrahuman that I sourced. The second deal was a company called Cart, which were two Stanford 19-year-old dropouts that moved back to India. And our fund wasn't up at the time, and Herschel invested through the family. Um, and obviously, entry points in India are a lot different than entry points in Silicon Valley. And that was another reason what drew me to the market. But Herschel was able to be the first check in a company called Cart, which turned into Zepto. And that was the first unicorn of 2024, or 2023. No, 2024, I believe. They just got valued at 1.4 billion. So that was like a massive, massive run up for Herschel, and that really solidified our relationship. But that showed us around sectors that food is something that is a massive, massive, obviously, market in India, but not just like, selling food, but like food tech, food logistics, and whatnot. So food is a category that we look at very heavily. We also kind of during our findings is that we're very bullish on clothing. So our one of our largest position is a company called Numi.Asia, which is ultra fast fashion for women. It's the Shein of India. We led their pre-seed. and that company is on a rocket ship, and there should be some really great positive PR on announcements coming out soon of that business. So we think clothing is a massive sector, specifically Gen Z clothing. We see companies like Zara and H&M that are just like really high price points, and we think that there's some great businesses solving that pain point, and also um, have more trendy SKUs and not just, traditional ethnic wear and stuff like that. So clothing is another space. We also think like logistics is very, very interesting. Obviously, we have these new trains everywhere coming in India. We have the industrial corridor, like building new train lines for industrial products, stuff of that nature. So we think logistics is going to be massive. We've made some great bets in that space. Import export is another amazing business that our sector that we're really looking forward to. We did a company called um, Onwu.trade, which is some early Flipkart guys that are doing a kind of a marketplace for companies outside of India to have access to Indian goods like basmati rice, sugar, etc. We also think that I'm very bullish on manufacturing. Obviously, India is, historically known as a very consumption heavy country, but as you have companies like Tesla and uh, Apple now going into Bharat and partnering with these manufacturers. And upskilling these individuals in these tier 2 to tier 4 Indian cities. We think that that's going to drive consumption, but also the upskilling of these individuals. So we're very bullish on manufacturing on many different layers. And then lastly, I would say that we are very bullish on like Bharat in general. So like we did a company called Apnamart, which is basically it's the Oyo model where they turn Karanas into Apnamart. So really handling the delivery, the logistics, supply chain, and kind of back end um, inventory management and stuff like that. And then lastly is so we do have a thesis where we invest in SaaS, but it's really around build in India, sell into the US. I think you have companies like Freshworks, Zetwork, Zoho, amazing people are coming out of these businesses and building these amazing SaaS companies that are selling into the US. So we definitely allocate into that sector. Um, and yeah, and then but just specific India use case pain points that we obviously look at, and then lastly, I think that there is a massive opportunity around brands to launch in India that solve pain points that have super large TAMs where historically products have not really been innovative on in so long. And that could be as easy as like shampoo. Like if you go on Flipkart, if you buy shampoo, it's Herbal Essence and Pantene. There's no like brand that we're like Indians like trust. And I think that there's going to be more brands that solve that have massive TAMs where Indians can truly trust these brands and stuff like that. So excited about those spaces.
Yeah, I think you pretty much covered all the interesting sectors. Food is a lot interesting because I think people sort of don't have an idea if in the West the kind of food diversity that exists in India, and with apps like Swiggy and Zomato, like what sort of like you know phenomenon it unleashed. Like the amount of choice right now there is on Swiggy in India is like it's mind blowing. Like you can get any permutation combination of any variety of food, Italian mixed with Indian, and you pick a choice and take a combination of it, you'll find it on Swiggy. Like that change that I've seen in the last 10 years is pretty mind blowing and also pretty unhealthy. Uh, so my bet, if I was to pick public stocks in India, I would pick, diabetes, type 2 diabetes as my next 10-year winner, because I
Yeah.
think we are seeing a revolution in consumption and the choice is like insane. It's such a cheap price.
Hmm.
Whenever I visit India, I mean, it still blows my mind the amount of choice you get with Swiggy and Zomato in terms of like, even if you are a picky eater, whatever of you eater you are, like you have it. Like,
Right.
the choice is like incredible. Um, I don't think people who order on DoorDash or Uber Eats can even like imagine what that is.
Right.
Um, but in terms of sectors, you talked about D2C, or you didn't call it D2C, but I think you called it as brands. And I can sort of attest to that is because all the brands, the consumer brands are, I think, 90s brands.
Mhm.
They sort of established their brands and trust in the 90s. And we have, I think, what, 600 to 800 million people who were born after 90s, right? And you have to sort of create new brands for them. And in 90s, there were no choices for consumers, and consumers obviously didn't have money, and there was no consumption at a scale that we have right now. So it's sort of created this new opportunity for brand innovation and product innovation in consumer sector that was not there before. I think that I'm pretty bullish and have invested in D2C companies in India for that reason, because there was no choice previously, and people were trusting the big brands, whatever they're launching. And now the consumer is sort of more aware of what is put in those ingredients, and they want better ingredients. So there's a whole spectrum of things. Um, so you mentioned, I think, before starting our call, or you mentioned on the call, you're starting a new fund, right? So are you changing your thesis? What are the learnings from the first fund? Um, what are you trying to do differently?
Yeah, great question. So we not changing the thesis. So really it's the biggest learning was ownership. Um, I think that um ownership really does matter, and also doubling down in your winners, and investing as much as humanly possible in your winners. Those are definitely the learnings, good learnings, and I think we've done a good job with that, but I think that there's always room for growth. But yeah, fund two will be the same exact thesis. It's just really coming to the table with more ownership, or with a bigger check to have more ownership. So we like to call ourselves like the eyes and ears of Silicon Valley for India. There's a lot of funds in the US that are in that like 50 to 300, $400 million range that have a global thesis, but want a little bit of exposure to India. They're just not going to do any of the heavy lifting, which is totally normal. It makes sense. But again, we source 99% of our deals. So when we share deals with our friends, like, yeah, we want them to invest, et cetera. But like, we also want to like have large ownership. So, that is something that, we've learned, and Fund Two will be able to execute on that. Um, but yeah, no, same exact strategy, same sectors. We'll probably have a little bit less companies in the portfolio, probably around the like 30 to 40 mark. But yeah.
Yeah. Talk a little bit about, how is the venture ecosystem right now in India? I mean, there was certainly, because I was closely observing from 2017, there was certainly, I think, a peak at 2021, I would like to say, both in terms of like valuations and number of people who are doing angel investing. It sort of, I think, aligns with what was happening globally. Where do you see right now in the venture ecosystem in India? Where is it thriving? Where is it lagging? Do you see any gaps, late stage, early stage, mid stage? What's your overall view in terms of just, venture ecosystem?
Yeah, so I entered India in 2021, really in terms of like writing larger checks. 2020, 2021, that's obviously was the top of the market, at least for this cycle, or that cycle. So when I first entered, it was all craziness. It was YC doing all this India stuff, which is great. We've done a ton of companies that went through YC. We invest before YC. And I think YC is phenomenal. I think they pulled back on their total investments in India, and founders are still excited about YC. So we saw a lot of companies where they didn't might not have had that much traction, but the founders had really good backgrounds. So they were able to raise quickly, and I don't think a lot of these companies should have raised the money that they had. So I think it was just really frothy, the market, and capital was really cheap. Um, I think now just the overall sentiment is the bar is a lot higher. There's a lot of funds with dry powder, but there's a lot less deals happening. Um, and I think that's definitely good and bad. So I think that's the sentiment. I think that um, the funds like the tier ones are not as doing as much seed anymore as they were. I think they're kind of more relying on A and Bs and focusing on their winners and dumping more into the winners, which is great for funds like mine because there's more of a blue ocean. And one thing that I will say is that one thing that's helped us is that we build and have maintained and consistently have built strong relationships with the tier ones in India. And we have weekly and monthly calls with these general partners because it's good to build that relationship from a deal flow perspective to sharing deals to having them obviously invest in your businesses, et cetera. That's something that we've really doubled down on, and there's so many great funds that we work with and great partners. Um, so I think that is the sentiment on the investing side. I think on the founder side, sentiment is like the founders. It's hard for founders. It's not easy to get a check like it once was a couple of years ago. And I think that it's actually a really good thing because it allows founders to really understand pain points and speak to their early customers and really truly build businesses that are just solving massive pain points. Like I said, I also think that there was a lot of tourist investors that came to India that have now left. And I think that's another thing that's good for our fund, but also like a lot of that capital that came into India was like not really value add capital. It was more so like, hey, this market's super hot. Let's just throw money at it and see what happens. And we have a rule within our fund where if there's not an Indian angel or fund on the cap table, I won't invest. So if it's just like me in a US fund, I won't do the deal. Because I need local expertise and local knowledge. That's something that we have close. Yeah, so I think the sentiment is growing though. However, like I do think that markets are turning. I do think that what's it's sad and good at the same time there's been a lot of layoffs in the last like 12 to 18 months where I think that's allowed founders to build and like a lot of these founders like that worked at these companies like Unacademy, Swiggy's, like all these companies, if they were to get laid off for whatever reason, they've seen what these companies kind of take to get to 0 to 1 and beyond, and they may have some equity where they're like, wow, this could actually turn into like real money. Then they've tasted it. I think it's been a lot of really new, like a lot of more kind of visionary type founders that are now wanting to build their own dreams and build their product and stuff like that. So there's a lot more deal flow. So I think that's the overall sentiment right now. And then to answer your question around late stage, I do think that I think there may be a Series A crunch happening more and more in India where you had this huge run up of seed and then they're not going to be able to raise A's. And I think that there's a lot of bloated funds in India or just like have India focus that have too much capital and it's going to be really hard to create like true alpha and really multiply the fund. So I think staying lean and mean, granted where the market is right now is where you're really going to get those really multiply the fund. And I think late stage India, we're now seeing the IPO market like opening up more, and I think that that's going to continuously grow. But a lot of these late stage funds, they're not doing that many deals. There's not that many deals out there. And I think it goes back to like there's founders that are like not wanting to raise down rounds. They want to hold on to equity. So I think the late stage India right now, I think that that's going to take some time. And I think the secondary market in India is super hot, as well. So yeah, I think that's the overall sentiment.
Interesting. Um, you mentioned Y Combinator, Indian companies. One of the things I noticed when 2021, 2022 era of Indian companies, I think that was the highest Indian companies per batch in YC. Um, and because YC does, pre-seed, YC was equating an Indian company with a US company valuation. So what we ended up with was we had Indian companies with bloated valuation, which makes it really tough to do a seed because technically what valuation YC was doing for an Indian company at pre-seed was probably a seed or sometimes Series A valuation if you actually look at a traditionally Indian company that is, working towards an Indian market. So this imbalance sort of is now uh, um, is appearing in the market, and these are the ones they can't raise next round because it's too costly for a seed investor to come in. So now they have to really go into like Series A or Series B to raise the next round. I think which is making it really tough for those companies to scale. Um, who are the other sort of investors, pre-seed investors that you follow and admire in Indian ecosystem?
Yeah, I mean, first and foremost, Kunal Ball from Titan. We've done probably 9 or 10 deals with him. Absolutely phenomenal man. I've never met Rohit yet. I heard he's a phenomenal individual as well. I would love to meet him. Um, the way, so Kunal invited me to Snapdeal in Gurgaon 2 years ago, a year ago. And when I met Kunal, his desk is in the middle of all the employees. He is he is such a founder, and the culture he's created is absolutely amazing. And that is somebody that I look up to in the ecosystem where, like, as a founder, as an investor, like he is tier one, man. Like I cannot share more about him. So he's someone that I really look up to, and he's hired some great individuals as well. So Titan is somebody that I consistently look up to. Um, I would probably say he's like the main one that I look up to. There's other funds that like I work really closely with. So I love Lights. I speak with Lightspeed a lot. There's a lot of great partners at Lightspeed. Um, Obviously, Haman and Dev Curry at Lightspeed. Nexus, huge fans of Nexus. The Pradeep Pradar, Excel, like Anna Daniel sits on a couple of the boards that the companies that we've invested in. He's phenomenal. These are funds that are very close to us as well, and then obviously like the international funds that really love India as well too, like the Tigers of the world, the Editions of the world, which are great funds as well. But at pre-seed, yeah, I would probably say Kunal. And there's a lot of angels too. You have like for an example, like Arjun Vedia. I just met him in person for the very first time. He knows the D2C space very, very, very well in brands, and understands trends, and like he's made some great investments. So having people in my network like him, I met a gentleman named Sujit Kumar last month, the founder of Udaan, first employee at Flipkart. This guy knows supply chain, he knows manufacturing, logistics. Obviously he's a big angel, and has a great family office, etc. So there's a lot of folks that we lean on for just like local kind of diligence and advice. There's another guy named Raghav Bal, which he's a really good friend of ours. He was heading Alibaba India, and was early at Bessemer, and I think he like sourced Swiggy in 2014 or 15, and big basket, and just really, really, really smart individual people that have had that 15 to 20-year journey in India, that know a million times more than me about the India ecosystem. And those are people that we build relationships with, we maintain relationships with, we try to provide as much value as humanly possible to these individuals, because we know that they're industry experts. And another gentleman that I just became really close with, that I really truly admire, is a guy named Manoj Kohli. He was the CEO of Airtel for 14 years, and then he was the head of SoftBank India. And we have wonderful conversations about the future of India. We go over reports that like Bain and Goldman Sachs and EY create, that we discuss like trends and stuff like that, and what we believe the sectors that will really grow and be large in India. So these are all people that like have accepted me and have given me an opportunity and give me their precious time that I cannot be more grateful for. So those are the folks that we really kind of keep closer in our network.
Amazing. So I think that's a good note to end the podcast. And where can our audience find you? What's the best way to follow your work?
Yeah, so LinkedIn. LinkedIn is the platform. So it's just Brendan Rogers. You can find me on LinkedIn. And I really appreciate everyone listening and excited to share this on LinkedIn. So stay tuned for the episode. And thank you so much for allowing me to be on your podcast. I really do appreciate it. Thank you.
Thanks, Brendan. Thanks for coming on the show.